All right, good morning, traders. Today, March 19th, 2026. My name is Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. That's the day trading service for the Hit and Run Candlesticks family. Thank you so much, everybody out there in podcast land, digital land, cyberland. Thank you for subscribing to my content, following my content, liking my content, leaving kind words on my content, following my content. Appreciate that. Special shout out Ed Carter, Rick Sadler, John Jordan, Bob Jordan, Kathy Sarah Roasted for sharing the content, helping get the good word out there to the World Wide Web. Appreciate that. Love that. Thank you so much. All right. Let's take a look at what happened yesterday. See how we can prepare ourselves for today. Oh, before I get started, remember e-learning. Today at noon starts with Doug. I come in at 1. Rick's going to come in at 2. If you don't see me here in the room, probably going to be in the combo room. If you want to know how to get to the combo room, by the way, we're all going to do a little webinar on trade entries. All right. So let's take a look at how to get to the combo room. So I'm going to pull this up here. Okay, this is our trading room right here. So you go over to your member page, right here. It's our member page. You can see over here to the right. This is the one we always log into the room. Log in right here. It'll open up another room for you. You just log in, and you can get into the combo room there. All right, and all the webinars should be recorded. No guarantees. Sometimes technology fails us, but where the past ones are located go to the resources tab, come down to e-learning replay, and you can see we've got all the videos from the past. All right, webinars for members. Okay, this is members only. That's the benefits of being a member. There's 10 videos per page, 35 pages. That's about 350 videos right there. Okay, so tons and tons of learning content here. Okay, and if that's not enough, we got another 200 on the public e-learning right here, and you can see another 20 pages of 10 videos each on each page. So about 550 videos right there. And then if that all of that is not enough for you, you can always go to our YouTube pages, and you will find thousands of e-learning videos or learning videos from the past. All right, so tons and tons of learning content. Let's take this out of the way. So again, that starts today at noon in the combo room. All right, some topics are going to be trade entries, as well as other questions and probably market summary of what's going on. All right, let's take this down. My SPY pivot today, this morning, 666.50, above it. I'm a bull, below it, I'm a bear. SPY, FNGU, IWM, Diamond Dow. Actually, everybody, all right, all of the Fab 5, lower lows, lower highs, closing under bearish traps, under 17 EMAs. SPY closed with 2-hour, that's a downtrend. That should say downtrend, should have been downtrend. SPY closed with a 2-hour downtrend, 10-minute downtrend. Gold made a lower high, lower low, closing under bearish trap under the 17. Silver, same thing. Lower high, lower low, closing under bearish trap under the 17. USO, quite the opposite. Higher high, higher low, closing over a bullish trap over the rising 17. USO having a 4 daily candle breakout. Okay, kind of said that was probably going to happen like that. UNG made an outside day, higher high, lower low, closing over a bullish cross and over the flat 17 EMA. US dollar index still in a daily uptrend, closed near the 100.25 area, trying to break out of the top side of the bear flag and ruin the bear flag. We'll see what happens. SPY Max Pain today supposedly is 665 if they haven't changed it on me, with a put to call ratio of about 1.1 put for each call that expires today. Remember, index options expire at 4:15. Security options expire at 4. Okay, so if this is your first time seeing this page, these over here under the bulls column, all in daily uptrends over the 17 EMA, okay? Exponential moving average. If this is your first time seeing this, these over here in the bears column are in daily downtrends under the 17 EMA. Excuse me. And if they got a little star next to it, they're building out over here. They would be building out a bull flag, or I call it a launch pad from which to launch higher. If you check out FSLY, pretty sure that did had a star on it yesterday, and then it launched higher. Okay. If they got a little star over here, they're building on a platform or a bear flag from which to dive lower. Okay, so star means they're bear flagging. Dash means it broke out yesterday. Okay, so you can see you got one GPK broke out, BZ broke down or dove lower, YMM dove lower. So you can see right there. These are kind of like setups telling you this is ready for a move. These to the upside, these to the downside. So daily uptrends over the 17, daily downtrends under the 17. Let's take a look at the market this morning. Let me just go over something real quick here. See if I can get the drawing tools up. I just want to show you, this is how I trade bear flags, okay? Just the opposite of bull flags, okay? On my bull flags, I trade bull flags from the bottom up to the top. And on my bear flags, I trade them from the top down to the bottom. So I trade them from up here down to there. Okay, from up here down to the bottom. Here, down to the bottom. Eventually, you get a breakthrough most of the time. Okay, so you can see from here down to there. There, down to there. Okay, so this time when I get here, I kind of remove 90%, all right, of the position, and then reload it up here. Second time, kind of remove or take profit on 70% of the position. Okay, in case it wants to run, all right, I want to have something in for the run or the breakdown. Okay, it comes back up again, reload it, and do it again. All right, and on the third time, like I'll take off 50% of the position. In other words, I'll take 50% profit here and leave the rest to ride in case it wants to break down. As they keep coming back, I'll just keep reloading it and reloading it until I get the breakdown. All right, or they ruin the bear flag, one or the other. But that's how I trade bear flags. Bull flags, let me just say, it's just the opposite. All right, so let me just move this. Let's just say this was a bull flag. All right, so I'm going to move this off to the side. Okay, so let's just say, imagine this is a bull flag. I would trade it from the bottom up to the top, removing 90% of the position, taking profit, all right, for the first time in case it wants to continue higher. All right, I want to have something in for the ride. All right, and if not, come back, reload it, and this time I take off 70%. All right, and I'd have 30% for a ride in case it wants to go. No guarantees it's going to break out, and I just keep reloading it. All right, until I get that bull flag breakout. That's how I trade bull flags and bear flags. All right, just a little FYI, and it makes common sense too. You know, it's just price will be constantly testing the tops and testing the bottoms. Okay. All right, force buy. Let's get this out of the way. All right, we got that lesson down. So take this out of the way and take this out of the way. Go to our 10-minute chart right here, and let's pick up this one right here, okay? 10-minute chart. Coming into the close, you can see the sticks, All right, and the 3 EMA, which is that thin yellow line riding underneath the 8 EMA. Okay, so 10-minute downtrend. You can see daylight, all right, between the 3 EMA and the 8 EMA. Okay, so 10-minute downtrend coming in to the close yesterday on the 2-hour chart. All right, 2-hour chart, you can see again, we've got the sticks and the 3 riding or plotting, all right, or mapping out underneath the 8 EMA, which is the white line. Okay, you can see daylight between the 3 EMA and the 8 EMA, so 2-hour downtrend coming into the close. Okay, on the daily chart, okay, we've got a lower high and a lower low. We close under, you see all this, you got daylight between the 3 and the 8, and the sticks are plotting, and the 3 is plotting underneath the 8 EMA. Get some daylight between them. All right, so we got downtrend. Okay, so you got lower high, lower low, closing under. This will be a bearish trap because we got daylight here. We've got the 3 plotting underneath the 8. So closing underneath a bearish trap. All right, these red dots, all right, happen to be the 17 EMA. So closing underneath a falling or fading 17 EMA right there. All right, and then we're still in the middle. Here's our origin of our rally. Starts in April last year. Comes up and over to the right. So big, long flag right through here. Kind of getting that dome top is kind of building out right now. Anyways, all right, this would be bullish because we're in the upper third. So bullish in the upper third. All right, currently we're making lower highs and lower lows, so we're in a downtrend. Okay, so got a downtrend, but we're still bullish because on the weekly time frame, all right, here's the origin of the rally right here, April, up and over to the right, bullish and in an uptrend, okay? Again, monthly, we are bullish and in an uptrend, still on the bigger time frames. Okay, so back to the daily. Okay, you can see we're up in the upper third, so we're still bullish up here. We're just experiencing a pullback. Now, we've done this before. You've seen this pullback. And how long did this pullback last? Okay, this one lasted, let's just look at it. Let's just call it the end of October. All right, till about the beginning of about 30 days. We'll call it 30 days. So how much we got here? Let's just measure it off. Okay, so there's the top. 25th of February. And we're at getting close to 30 days here on this pullback. We'll see what happens, okay? So there's SPY on the daily chart. Now, if you'd have followed my plan from yesterday on the 10-minute chart, and that was using the pre-market, post-market, okay, over here. All right, so for, 10-minute, right? Pre-market, post-market. That one right there, okay? That's the one I want. Okay, so in the pre-market, all right, yesterday we had a 10-minute downtrend. And my instructions for me, all right, was to trade the continuation of the 10-minute downtrend and looking for targets of 666.80, which we actually kind of hit right at 915 or 920, right around there. And then we were looking for 663. And I did mention yesterday there's a chance we see a $20 day, okay? Didn't get a $20 day, but I just said the potential would be there for a $20 day. I'm going to say that we double topped right up against this downtrend line up here yesterday in the pre-market. So we hit this downtrend line and we came down, and this was about 570, I'm going to call it 675, and you can see where we are in the closing hour, all right, for our low, 675 all the way down to 659. Okay, so $20 would have been $6.55. You can see we came kind of close, missed it by about a third. But anyways, big move yesterday. All right, that move, I just want to say right now, that move could get amplified today. So that $15 move from yesterday may be a $30 move today. Okay, it's not out of the question. Okay, I'm just saying, or it may be a $20 move today. We'll see, to the downside. All right, we'll see what happens. Okay, but I'm just saying there's a possibility. We've got one big red candle here. All right, if this thing starts to grow, if the next one happens to be a bigger candle, you had $20 drop yesterday, you could see a $15 drop yesterday. You could see that's from pre-market to post-market. We could see a $20 drop today. So if you look where we are, we're at 659. Let's just call it 660. Okay, so we could be down here at 640, maybe even 645 today. Okay, I'm just saying that the potential for that to happen is there. It's on the table. All right, so don't get in front of this. Don't try and trade a bounce. All right, just let it do its thing. All right, and they've got a lower high, and I think there's a good chance after this consolidation that we see here on the 10-minute chart in the pre-market, post-market, that we get a breakdown. And like I said, look out below. I would definitely think price is going to bounce for a couple bucks on 650. All right. But I do see further targets lower today. Okay. So we'll get a bounce around 650 or so. Okay. But I don't think it's going to hold. I think it's going to continue to flush down the drain. All right. It's just my hunch. I can see this easily start building out due to the geopolitical concerns in the, we're still in the conflict over there in the Middle East. All right. So you can see this is consolidating underneath all of that support. See that candle right here? See the lows? See how we're consolidating underneath the support? All right. Well, the same thing goes for when we get price to get up on top of resistance and consolidate. There's a good chance of it moving higher. Well, we have done the same thing here. Okay, we are underneath the support and consolidating. So there's a high probability of price breaking down, and it'll probably break down hard and fast. 650 will be first target, and I'm going to say 640, 645 will be our second and third targets. Okay, down there. All right, so prepare yourself for a really hard drop today. Okay, if it doesn't, we'll see what happens. All right, there's SPY in the 10-minute. I don't want to be scaring people, but I do want you prepared. All right, so when we were here on Monday, if you remember what I wanted, all right, I got my number right here, which was like 671.40, okay, but I wanted price to get on top and consolidate, okay? Okay, when it did that in the pre-market before the following day, we had a nice run up. All right, well, the same thing is going to happen here. All right, we've got consolidation under here. Look for a breakdown eventually. It probably will start melting down. And look for those candles on one of the time frames to start growing in size. All right, probably be the 15-minute or the 10-minute. The red candles will just begin to grow in size. It'll be like kind of like a mini capitulation. All right, so there's SPY on the 10-minute. You have my plan. Continue to trade the downtrend, the flag, from the top to the bottom, looking for the breakdown, and I think we get a hard drop sometime today. We'll see. If not, we probably come back up to this area right here, see where VWAP left off. I think we bounce underneath this resistance and then roll over. All right, that would be the second scenario where price comes up to this area and then we roll over. And then when we roll over, I think we come down to here, do about 5 minutes, 5 minute, 10 minute, maybe 20 minute stop here, and then continue to flush lower all the way down to 650. All right, we'll see what happens, but that's my plan. Bear flag, trade the breakdown. All right, so there's SPY on the 10 minute, and you got the plan, all right, for today. And it's a big plan, and it's a big mover, all right? So big possibilities today. Big, big, big. All right, so there's SPY. Let's take a look at QQQ. All right, on QQQ. Start with the 10 minute and work our way higher. 10 minute, you got the candlesticks and the 3 plotting underneath the falling 8. Okay, you got daylight between the 3 and the 8. Okay, you can see the black screen behind it. Okay, so we've got 10 minute downtrend coming into the close. 2-hour chart. 2-hour chart, you can see we've got the 3 and the sticks are plotting underneath the 8. You get daylight between the 3 and the 8. You can see the 3 is under the 8, so you got 2-hour downtrend coming into the close. Daily candle, okay? Same instructions for QQQ, by the way. Daily candle, okay? That's not the candle. This is it right here. Lower high, lower low, closing under a bearish trap, under the falling 17. Believe it or not, QQQ on the daily chart is still in an uptrend if we didn't include this candle here. Okay, we're still in an uptrend. Let me explain why. Okay, sorry about that. You get 2 wicks over here. We made a higher high right there. Since making that higher high, we have not made a lower low under the 17. Okay, because that would be the low to beat. All right, right there. That low right there. They have not made a lower low. Now, yesterday, let's see. And then you notice yesterday did not take out that low. So we were still in an uptrend. Now, this candle right here, obviously going to break those lows. All right, and that's why I'm saying we could see the hard flush all the way down to 580. All right, so QQQ, daily chart. If I didn't look at this morning's price action, would still be in a dysfunctional uptrend. And I call it dysfunctional because after making the higher high up here, they've done nothing but move to the right or melt down. Okay, there has been no higher candles made since making the uptrend. In other words, this high taking out those highs. In other words, making a higher high. So I'm going to pan way out. Okay. This is the origin of our move. April, up and over to the right. Bull flag. All right. Currently in a pullback. So currently we're in a downtrend. If I include today's candle, not looking at the pre-market, we're still in a dysfunctional uptrend. Okay. Now we're in a functional downtrend. Okay. With that, when I include this, because we made a lower low. All right, so there's QQQ on the daily chart. Yes, we're still bullish. All right, if we're in the upper third. All right, so bullish, dysfunctional uptrend. Include this morning, a fully functioning downtrend. There's QQQ on the daily chart. Weekly chart, all right, much like SPY, still bullish and in an uptrend. Anything could happen. Monthly chart, still bullish and in an uptrend. We haven't made lower lows on weekly or monthly. All right, let's take a look at game plans for QQQ, excuse me, and SPY. First one. Click on the 15. Let's go over here and let's click on this and let's click here. Okay, so here's our game plan for this morning. Okay, green erases red. Up here over 603.75. This is QQQ. Pivot, 598.30. See this consolidation, that double bottom right there. If we get up above that double bottom, they're going to probably go after that breakdown candle high right up there. So that high of 601.17. Pivot, 598.30. Above it, I'm a bull. Below it, I'm a bear. Red erases green underneath 593.60. And I'm looking at this low over here. So underneath 598.60, you can see clearly, 593.60. Clearly, we have gone past that. Okay, so this is you're already in a red erases green entry right now. Okay, so there's the 15-minute game plan for QQQ. All right, in the pre-market, if I look at it with the pre-market on there, you can see we're in a bear flag, and now we're starting to build out a 10-minute downtrend. See that 10-minute downtrend? So, plan. Trade the continuation of the 10-minute downtrend down to that 580 number. Okay? That would be my trading plan for QQQ. Same with SPY. Trade the continuing 10-minute downtrend down to 650 area. Okay, so there's QQQ, and we got to go visit SPY. Back over here. All right. I like Friday options on the multiple of 5. They have more open interest and tighter bid-ask spread. All right. I don't know if you were shopping for options yesterday, but you can see there was a lot of volatility priced in. All right. So that's kind of one of the reasons I like to shop on Fridays on the multiple of 5. They tend to have more open interest, so the bid-ask spread tends to be a little bit tighter than the rest of the days. All right, I like strikes $2 to $15 out of the money. It might be more advantageous at this time when there's too much implied volatility priced in to flip up to the at the money instead of out of the money. All right, only because you'll find that the out of the money, there's so much volatility priced in, and if the rate of descent is not fast enough, you will be constantly having to flip out of your out of the money options and find new ones that are closer to at the money. So you might be better off just trading at the money today because of the implied volatility, all right, already priced in the options. Sorry. I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP, all right? If a 10-minute uptrend were to manifest down here, okay, I'd like to see it break the bullish rubber band 10-minute rubber band candle. If a 10-minute downtrend were to manifest up here or up here, I would like to see it break the 10-minute bearish rubber band candle. And I'm going to be talking about rubber band candles, all right, as well as green erases red, all right. These are going to be signals for entry at the webinar today, okay? So I will review all of that for you, okay? So there is QQQ game plan, all right? I like the 1 day and 8 day till expiration. Again, that's going to wind up being on my platform, Friday options. Again, I like the multiple of 5. Okay, now, bear in mind, out of the money options, all right, they don't give you the price performance that an in the money option gives you. Okay, but let me say they cost a whole lot less. All right, so my favorite price point happens to be 30 cents on up to $1.20. I'm going to have to break that rule today because of all of the implied volatility. You will probably see me trade higher priced options that are closer to at the money because I'm expecting a huge drop. All right. Not to say that I won't trade some out of the money, but I'll be probably be much closer to at the money today than I will out of the money. Probably be just outside of at the money. Probably that's where I'll be when I pick my strikes. Okay, so there's QQQ. SPY's got a game plan as well. All right, SPY, same deal. I like the Friday options on the multiple of 5. I like strikes $2 to $15 out of the money. Same thing. I like 10-minute uptrends over VWAP, 10-minute downtrends under VWAP. All right, continuation. Let's look at the pre-market. And there is a 10-minute downtrend already manifested and breaking down. A continuation of the 10-minute downtrend. Again, expect a bounce at 650. Okay, 10-minute downtrend with a target of first target 650. And I'm going to say, look in the afternoon, we may see targets down around 645 and 640. Maybe even lower than that. Okay, because a lot of premium priced into this market. All right, and they'll probably be wanting to get out. All right, so there's SPY on the 10-minute. Back to the game plan. 660, 650 is my pivot. Above it, I'm a bull. Below it, I'm a bear. Red erases green. Underneath 660, 110, you can see clearly we're below it. All right, it's already been an entry. All right, green erases red. Underneath 671, 65 up here. Okay, so there's our SPY game plan. Again, I will be trading a 10-minute, the continuation of the 10-minute downtrend. All right, there's SPY on the 15-minute chart right there, but on the 10, I'll be trading that continuation of that 10-minute downtrend to the downside, looking for targets around 655, 650, and even lower than that. Big drop, expecting a big drop. I'm expecting a bigger red candle today than what we got yesterday. Okay, so that's SPY on the 15. All right, let's go back to the daily chart. Sorry about this, people. And let's go look at Diamond Dow. And yesterday's candle, lower high, lower low, closing under a bearish trap, under the falling 17, under the all-time high anchored VWAP, still bullish in the upper third, but obviously in a downtrend. IWM. Lower high, lower low, closing under a bearish trap. This is what they all did the same thing. Closing under the falling 17, closing under the all-time high anchored VWAP. Still in the upper third, okay, but in a downtrend. Lower highs, lower lows. Okay, that's IWM. Let's take a look at FNGU. All right, stinker yesterday, lower high, lower low, closing under. See the daylight between the 3 and the 8, under a bearish trap, under the 17 EMA, under the all-time high anchored VWAP. This is neutral. Okay, we're not in the lower third yet, and we're not in the upper third, so we're neutral on the bearish side of neutral, and in a downtrend. Okay, you can see price candles under the falling all-time high anchored VWAP. Right there, that's a pink line. Okay, so let's take a look at silver. Silver is neutral. Okay, closing lower high, lower low, closing under a bearish trap, under the 17, under the all-time high anchored VWAP, right there. That's that pink line, the upper pink line. Neutral, and in a downtrend. You can see they made a high. There's a low. We made a lower low. So downtrend. Let's take a look at gold. Gold's got a low. We made a lower low. Okay, got a low here, high there, lower low. This is a downtrend on gold on the daily chart. Okay, we're still bullish. All right, because we're in the upper third. All right. But we're in a downtrend because we got lower highs and lower lows. So there's gold, downtrend, but still bullish. Silver, neutral, but in a downtrend. USO. Here's that 4-candle breakout. I said to watch for that to manifest yesterday. Higher low, higher high, closing over. Bullish trap. See the sticks and the 3 plotting up over the rising 8. You've got daylight. All right, between the 3 and the 8. Okay, so that's a daily uptrend. Okay, so the plotting over the bullish, closing over the bullish trap, over the rising 17, over the 4-year high anchored VWAP. That's a pink line there. Top of quadrant 4. Okay, that's bullish and in an uptrend. And I think this can get up to 187 area, USO. Let's take a look at UNG. UNG, outside day, higher high, lower low, closing over a bullish cross, closing over the flat 17, closing under the 12-month high anchored VWAP, still in the lower third, so it's bearish, but we're still in an uptrend. Okay, it's a dysfunctional uptrend in that ever since making the higher high, we just moved over to the right or we melted down. Okay, so dysfunctional uptrend on UNG. All right, let's take a look at technicals. T2101. This is a 15-minute chart. Okay, market's breaking down and participation is increasing. That's bearish. Okay, that would be absolute breadth of the market. Okay, let's take a look at T2122. We made higher highs. We made a little bit higher lows. You can see we lost it all yesterday. Price action came all the way down to the sell zone, moved over to the right. Okay, bear flag in the sell zone, moving over to the right, and actually visiting the oversold zone a few times. That is bearish right there. Okay, notice we are on the southern side of the 50-yard line. Notice we get up over the 50-yard line into the bulls have control territory, okay, but we can't hold it. We give it up. See how we go up here, and then halfway through the day, if not earlier, we lose it. We get up here, and then halfway through the day, we lose it, all right, to create a bear flag with implied volatility to the downside. Okay, so bears have control. T2122, T2123. We've got lower highs. See, there's the all-time high. Lower highs, got a low. We're making lower lows. We're underneath the falling 200 SMA. That's bearish, okay? That's where you want to be if you're bearish. All right, so T2123, bearish. From the all-time high, you can see we're clearly at the bottom of quadrant 1. So that would be bearish and in a downtrend. T2123. That's the 15-minute chart. Same product. Now we're going to look at the 3-bar chart. Okay. Prior to our April rally, this was the all-time high. Okay. We pulled back. From the April rally, we produced a new all-time high. Okay. Back in September, October. Yeah, September. Pulled back to a higher low and then produced another new all-time high. Okay, so we're up here. We're in quadrant 4. We're bullish because we're in quadrant 4, but we're in a downtrend right now. We're over the rising 200 SMA. That's bullish, but we're currently in a downtrend. Okay, you can see here's a low that pokes below the 17. We make lower lows, so we're in a downtrend. Okay, so that's T2123 3-bar chart. Okay, still bullish, but in a downtrend right now. Okay, let's look at Stinker on the 15. You can see Stinker, this would be the 18th, would be yesterday. You can see price action. You've got a high, you got a lower high. All right, and then we got lows, we got lower lows. So obviously Stinker 15 is in a downtrend under the 200 SMA. It's where you want to be if you want to be a bear. We're under the all-time high anchored VWAP. That's the pink line up here. You can see from the pullback low, okay, we are not bullish at all. All right, we're actually neutral. And if you look at the dotted dash line, we're on the bearish side of neutrality. Okay, so bears are in control. Again, they're showing you who's in control. Bears. So we want to look for 10-minute downtrends to trade those indices to the downside. Okay, 10-minute downtrends to jump onto. So there's FNGU. Let's take a look at the US dollar index. I'm going to pan way out. 2025 high. We go into a daily downtrend, producing lower highs and lower lows. All-time, well, 2025 high. Lower high, produce a lower low. another lower high, another lower low. From there, we go into a consolidation mode, into a bear flag with expanding volatility. Notice the lows keep dipping lower and lower, and the highs tend to generate a little higher and higher. So we're currently in this bear flag, big bear flag, but we have a daily uptrend because we got a high here, we got a low here, we make a lower high, but yet here we make a higher low, and now we produce a higher, see the high, a higher high that puts us in an uptrend inside of this bear flag. Now, they need to get up on top of here and consolidate and hold the higher ground. Okay, you can see it's been since June, they have not been able to do that. Okay, since June, they have had troubles climbing on top of the bear flag, holding the higher ground and consolidating. That's the US dollar index. All right, let's take a look at the economic package. I'm going to refresh this because it might have changed. It's typical for it to change. Okay, max pain still 665. Put the call ratio, that's for the puts and calls that expired today, 1.1. So 1.1 put or 1.2 puts for each call that expired today. Okay, I'm still bearish. All right, did not want that. Earnings. Alibaba reports this morning, 315 billion. Not a big market mover. PDD Holdings supposed to report today. They got a dash, so I'm not positive. They may be looking for their P&L or still assembling it or compiling it. Accenture, 131 billion. All of these, all right, big notables, all right, right here, but not market movers. Okay, you want market movers? You go to tech. This is the tip of the spear. The tech, the semiconductors, the NVIDIA, the AMD, all of those would be the tip of the spear. The big cap software, Microsoft, Google, the search engines, that's such. Those are going to be the tip of the spear, okay? Mainly the semiconductors, the hardware, because that's going to set up the parameters for the software, all right? So whenever technology produces new hardware that's more powerful, I mean, that is really the tip of the spear right there. The NVIDIAs and the Intel and the advanced micro devices, Micron technology, all the Taiwan Semiconductor, okay, all those chips that help make things move faster and think faster. That's the tip of the spear. That is the future for all markets, all right, is that tech. And that's always the tip of the spear. Whenever that starts moving up, keep an eye on the markets. You will tend to see the markets reverse and start melting to the upside. Okay, so that we did max pain. We did the earnings. Tomorrow the earnings are going to be, again, we did Alibaba. Tomorrow the earnings are going to be notables, all right, Carnival Cruise, but nothing here that's going to move the markets. Wednesday, we had Micron Semiconductors, and I think they reported good. All right, it's just we're in a down market right now. All right, so for economic calendar, we had the main event yesterday, which was FOMC at 2 o'clock. They did not change rates, which was pretty much what I expected due to the oil conflict over there in the Middle East, which kind of sets the tone for the energy prices. And as long as those are going to be fluctuating, I can't see FOMC giving the markets a rate cut until that is stabilized, okay? Because energy also is part of the tip of the spear in that none of this hardware will work without energy, okay? Very, very little of it. So again, until we get that energy stabilized All right. I don't see rate cuts for a while. All right. Until that's done. Today we've got jobless claims at 8:30, Philly Fed Manufacturing Index at 8:30. We're going to get a delayed report on new home sales at 10, business inventories, another delayed report at 10, wholesale inventories, another delayed report again at 10, gas report, and that'd be inventories at 10:30. And then tomorrow we got a rig count at 1, and Mr. Powell's going to speak at 10:30 in the morning. All right, that's it for me for this morning, traders. I'll render my video, and I will see you all in about 30 minutes. Unless you got questions, I will look. Thank you, Alan. The good words is puts. The word of the day is puts. Yes, it's called short, or puts. Okay, sell, short, and puts. Those are the 3 words for the day. All right. Trade the continuation of the current 10-minute downtrend. Okay, that's the current plan on deck. Is right here. SPY. Got a 10-minute downtrend. Trade the continuation of the 10-minute downtrend. Continuation. Okay? Possible big fall today. Possible big fall. You saw yesterday's candle was a $15 move. Well, we could get a $20, $25 move today. Okay? So 640, 635 is on the table. We will have a short pit stop at 650, all right? But I don't think we're going to stay there long, all right? All right, traders, I'll see you all in about 35, 40 minutes. We'll open up the markets.